What's up everyone? Welcome back. Today we are diving into a super interesting topic that's making headlines worldwide: the slowdown in the global luxury market. Alright, so luxury fashion brands have long been symbols of status and exclusivity, but turns out they are not as recession-proof as everyone once believed. The downward trend in the luxury industry became evident last year when e-commerce conglomerate Farfetch narrowly escaped potential bankruptcy. They received a last-minute rescue through an acquisition by South Korean e-commerce giant Coupang. The Farfetch drama caught everyone's attention and highlighted the uncertain state of the luxury sector, which began struggling and facing tough times starting in the second half of 2023. Looking at the graph, we can see the quarterly growth of the luxury sector since last year. Although the sector managed to remain in the positive side, there was a significant slowdown with growth dropping from double to single digits in the second half of 2023. The challenging situation worsened as the luxury slowdown continued in the first quarter of 2024. The situation is especially dire for Kering-owned brands. Gucci, Saint Laurent, and Kering's other brands, which includes Balenciaga and Alexander McQueen, are in the negative territory, following with Burberry and Stone Island. LVMH's fashion division, Prada and Bottega Veneta, grew in the single digits. Surprisingly, Hermes and the Moncler brand managed to grow in the double digits. The clear outlier in the sector is Miu Miu, with an exceptional growth of 89%. Kering is clearly the hardest hit by the luxury slowdown, mainly due to the struggles of Gucci, the brand which accounted for 2/3 of the group's operating income last year. In the first quarter of 2024, Gucci experienced a significant decline, with its revenues falling by 18%. The downturn is particularly pronounced in China, which has been a crucial driver of growth for Gucci over the past decades. The recent economic slowdown in China, combined with strict COVID-related restrictions and regulatory crackdowns, has significantly dampened consumer spending. This is a major blow for Gucci, which heavily relies on Chinese consumers. To reverse the situation, Gucci underwent a significant overhaul by appointing a new creative director and a new CEO last year. The new creative director, Sabato De Sarno, put an end to Gucci's long-standing maximalist image and steered the brand towards quiet luxury. Although this strategy has not yet stopped the decline in sales, there is a hope that it will ultimately succeed. Yves Saint Laurent, another poor performer under the Kering umbrella, experienced a notable 6% decline in revenue during the first quarter of 2024. Despite Anthony Vaccarello's exceptional work, it appears that this effort is still not enough to win over wealthy consumers. The brand's performance highlights the broader challenges currently facing the luxury market, where even established names struggle to stay relevant. According to Kering's top management, the brand's performance was relatively stable in Western Europe and showed strong growth in Japan. However, the Asia-Pacific market remained challenging. We have more bad news for the French luxury group. Reported revenue was down 6% in Kering's other houses category, which includes brands like Balenciaga, Alexander McQueen, and Brioni. Balenciaga is on an improving trend though, following the brand's major scandal. Sales were up in Western Europe and Japan, with double-digit growth in North America. The recent collection staged in Shanghai, China, was clearly aimed at boosting sales in the Asia-Pacific region. Other efforts to beat the crisis include several new campaigns and collaborations, such as Balenciaga's recent collaboration with French musician Boyfriend, who is also Demna's husband. Boyfriend has produced original soundtracks for every Balenciaga show since 2017. The new campaign features a 4-hour playlist, a super fun 8-bit video game, and a small range of merchandise, equipped with an NFC chip that provides access to all the content. Alright, let's take a look at another French luxury giant LVMH, which owns brands like Louis Vuitton, Dior, Fendi, and many more. Despite the ongoing economic and geopolitical uncertainties, the group managed to maintain a positive growth trajectory, although at a significantly slower pace compared to previous years. Unfortunately, we don't have specific earnings insights per brand. However, overall LVMH recorded a 3% revenue growth in the first quarter of 2024 in the fashion and leather goods category. According to the LVMH press release, Dior experienced a creative momentum in the first quarter, thanks to the good progress on the runway collections created by Kim Jones and Maria Grazia Curie. Additionally, Louis Vuitton had a promising start to the year, driven by the success of Pharrell Williams and Nicolas Ghesquier's ready-to-wear runway collections. The LVMH group recorded a strong momentum in Japan, with a 32% increase in revenue. It turns out that, unlike other countries in the Asia-Pacific region, Japan is experiencing a luxury boom. This is mostly attributed to the weak Japanese yen. Most companies reported a revenue surge in Japan, boosted by wealthy Chinese travelers drawn by favorable exchange rates. Additionally, revenues are boosted by locals who choose to shop at home to avoid the impact of the weak yen abroad. Last but not least, let's shift our focus to Burberry. Things don't seem to be going well for the British fashion house. Despite efforts, the revival and rebranding led by Daniel Lee has failed to win over the hearts of their wealthy consumers. The Burberry Group recently published its preliminary results for the fiscal year ending on March 30th, which covered Daniel Lee's first few collections for the brand. It appears that the brand is in a dire situation, with revenues falling by 12% in the last quarter. Perhaps when they hired Daniel Lee, they expected a Bottega Veneta effect, but it did not materialize. However, it would not be fair to blame everything on the new creative direction. Let's hope that Daniel Lee's revamp of Burberry will ultimately succeed. Alright, to sum it up, the high-end brands like Hermes and Brunello Cucinelli are doing great. They continue to attract ultra-wealthy clients seeking out coveted items like the Birkin bag. In contrast, brands with high exposure to middle-class consumers are doing the worst, such as Gucci and Burberry. Some brands have shown strong momentum, defying the slowdown in the luxury sector, such as Moncler and Miu Miu. While almost every other brand struggled in China, Moncler achieved double-digit growth. It appears that functional techwear resonates well with wealthy Chinese consumers. Similar to Moncler, Miu Miu saw strong growth in the Asia-Pacific region. This success was driven by authentic partnerships with Asian influencers and by hosting events tailored to the local audience. Another factor contributing to Miu Miu's stellar performance was its ability to stay relevant among both mature spenders and Gen Z consumers. Alright, despite having a few winners, the overall trend in the sector is troubling. The luxury market slowdown is clearly a complex issue influenced by turbulence in the global economy, digital transformation, and shifting consumer preferences. Young consumers are looking for experiences over products, personalization over mass production, and ethical practices over opulence. On the positive side, the luxury market slowdown can be an opportunity for brands to innovate and align with the values of new generation of consumers. In today's age, brands should invest heavily in digital innovations, such as virtual try-ons and AI-driven personalization. Additionally, they need to focus on sustainability initiatives, including the use of eco-friendly materials and transparent supply chains. Brands that embrace these changes are and will be better positioned to prosper in the ever-evolving market.